In crypto and in Bitcoin, we have always been talking about this 4-year cycle. We have seen some kind of like a slowdown, even though the fundamentals are still very good for Bitcoin, and people thinking, right, so now we are going into a bear market. The narrative of, are we already in the bear market? The 4-year cycle is finished.
I don't think that's the case. I actually think we're in the early stages of a long bull market. The Bitcoin halving is a lot less important today now that there's very little Bitcoin left than it was 4 years ago or 8 years ago. So the forces that drove the 4-year cycle, I think, are no longer present. We're in something more like a 10-year grind, where we're slowly going to move upwards on Bitcoin as it traces its way up towards $1 million. They're buying way more Bitcoin than the new supply. I think institutional buying will be 2 to 3x the new supply. So the question is, why didn't the price go up? And the answer is
the fact that we found that actually Venezuela was holding so many Bitcoin, right, could maybe kick off a new trend that will be the Bitcoin sovereign treasuries.
I think it's actually already happening in a significant way. I think we'll find that there are many other individual countries that have been quietly accumulating and holding Bitcoin.
In crypto, we have been talking about this for quite some time now, and there are different views. It is the infamous 4-year cycle for Bitcoin and crypto. So, are we now in a bear market? Are we now still in the bull market? Is the bear market already gone? Well, there are so many different perspectives about how to think about the 4-year cycle. And this is why I sat down today with MattHougan. He is the Chief Investment Officer at Bitwise Asset Management, where he helped create the world's first cryptocurrency index fund. And now Bitwise manage more than $1.5 billion in assets. Matt is a long-time believer in the power of crypto to improve all the financial system and investment portfolios. He's also an expert on ETFs, and he used to be the CEO actually of ETF.com, where he helped create the world's first ETF rating system. So I kind of ask for a better guest really to explore this concept of the 4-year cycle. And it's quite important to understand because that is really a reflection of where we are in the crypto industry and how much adoption we got to kind of like break the standardization or the rules that analyst has created to make it simple for us to understand the timeline of, investment trading and everything really. We like to kind of like put structure around things, but obviously there is evolution, things change, and the cycles are not the same anymore. But before we begin, a brief word from our sponsor. This episode is supported by Hive Digital Technologies, a company building the infrastructure of the future at the intersection of Bitcoin and AI. 2025 has been a pivotal year for Hive, with a significant hash rate expansion, the development of one of Latin America's largest AI data center projects in Paraguay, and the rollout of sovereign AI solutions across Canada and Europe, all powered exclusively by green energy. To learn more, visit hivedigitaltechnologies.com. Hi Matt, how are you doing?
I'm doing so well. Excited to be here.
Yeah, likewise. I wanted to kick off with a question that many investors are asking, and I also been thinking through it, right? In crypto and in Bitcoin, we have always been talking about this 4-year cycle, right? And that has been debated over the last few months because obviously 2025 was a fantastic year for Bitcoin and crypto, massive institutional adoption, regulatory support, and then obviously there was the Bitcoin treasury companies, right? They helped really a lot with adoption from a corporation standpoint, which definitely is important. But then we have seen some kind of like a slowdown, even though the fundamentals are still very good for Bitcoin, and people thinking, right, so now we are going into a bear market. So here again, the narrative of, are we already in the bear market? The 4-year cycle is finished. So, you are an expert in digital assets. You have been in crypto for a long time, and I think you have got also an interesting perspective around how can we think about this 4-year cycle? Does exist completely changed?
Yeah, it's a great question. I think it's probably the most important question for crypto investors right now, because according to the 4-year cycle, this would be a big down year. We would be in crypto winter, and people should sort of hide out until we recover in the spring. I don't think that's the case. I actually think we're in the early stages of a long bull market, and that the bear market has already happened. The crypto winter is over, and it's the early days of spring. Let me break down what I mean by that. Historically, we've moved in this 4-year cycle, and there are various explanations for it. The Bitcoin halving is one explanation that occurs every 4 years. Interest rate cycles are another explanation. There were big interest rate hikes in 2018. There were big interest rate hikes in 2022. Blowups is another reason. FTX in 2022, EOs in 2018. No one really knows what drove this cycle historically. But the thing about those things is, regardless of which one you look at, they're no longer very strong in the market. The Bitcoin halving is a lot less important today now that there's very little Bitcoin left, very little new supply, than it was 4 years ago or 8 years ago. By definition, right, it's half as important as it was last time. Interest rates are going down. They're not going up like they did in 2018 and 2022. And I don't think there's the same kind of blow up risk that we had with ICOs or with FTX. I don't see that kind of risk in the market. So the forces that drove the 4-year cycle, I think, are no longer present or no longer strong. And on the other side, you have this institutional adoption craze, which you talked about. You have regulatory progress. These are slow moving forces, but they're very powerful. So I think we're now sort of out of the 4-year cycle. We're in something more like a 10-year grind, where we're slowly going to move upwards on Bitcoin as it traces its way up towards $1 million. Not with the kind of boom and bust we had in the past, but with a more measured upward movement. That's the cycle that I think we're in.
It's interesting because people in the market, expert analysts, they kind of like to standardize stuff. That's why, there is a 4-year cycle. Every 4 years this happen. And then what is going to be the narrative, right? We saw DeFi, and then was NFTs, and then was ordinals, and last year was the Bitcoin treasury companies. What's going to be this year now?
Yeah, well, I think there are a couple. One is just institutional adoption. I can't emphasize both how early it is and how strong that trend is. In the US, we have wirehouses that control about, 15, 20 trillion dollars in assets. They just approved the Bitcoin ETFs in Q4. So you're just going to start to see those flows. So I think institutional adoption was a big theme in 2025. But I think it's going to be 2 to 3 times bigger in 2026. And then the other big theme for this year is real world use. Stablecoins, tokenization, DeFi that institutions can access. I think those sort of real world applications are going to be the themes. Look, I think broadly we're in the cycle of institutional adoption and real world use cases. And that's a pretty exciting narrative, if you ask me.
Yeah, definitely. That's very interesting. I mean, so you see Bitcoin from one side, and then you see all the rest of the digital assets, crypto space that is revolutionizing finance. Can we summarize it like that?
That's extraordinarily well said. I absolutely agree with that. You have Bitcoin on money, and then you have everything else disrupting, as you said, the rest of finance. And those are both really exciting. They're moving upward at the same time, but they're very different things, right? What Bitcoin is doing is very different than what Solana is doing. And I think it's important to keep those two separate. So I like that you clarified that.
Do we want to talk a bit about liquidity, Bitcoin liquidity, right? Because I think has been identified as one of the challenges, right, of the Bitcoin, let's say, time frame that we are on.
Yeah, absolutely. Look, Bitcoin's price is set by supply and demand. It's easy to look at the supply of Bitcoin. We all know what that is. It's programmatic. There's 164,000 new Bitcoin per year. That's it. That's the full supply. And you can look at ETF purchases, or you mentioned DAT purchases. Last year, that was like 600,000 or 700,000 Bitcoin. So they're buying way more Bitcoin than the new supply. So the question is, why didn't the price go up? And the answer is that liquidity element you spoke to, which is to say that there were long-term old OG investors in Bitcoin who decided to sell last year. They decided to sell roughly because Bitcoin got up to $100,000, which is a big round number. And people are people, so they like big round numbers, and they were willing to sell at that level. I think the question we should be asking is twofold. One, will this supply-demand dynamic persist between institutional buying being more than the new supply? I feel strongly that it will persist. I think institutional buying will be 2 to 3x the new supply. So then the question becomes, how long will OG sellers continue to sell into this market? How long will they supply liquidity into this market until they run out of Bitcoin that they're willing to sell? As I look at the market today, there's still a lot of Bitcoin for sale at $100,000 or so. So I don't think we're out of this sort of range-bound trading where people are supplying liquidity into the market, but eventually we're going to exhaust that liquidity. Will that happen in Q2? Will it happen in Q3? Will it happen in Q4? I'm not sure, but I do think it will happen. I think it will happen this year, and then you'll start to see the price move up materially.
Interesting. And another topic that has been that I was following really was actually Bitcoin on chain, right? And that impacts a lot the Bitcoin miners, because if there is not much activity, the fees they get are not so exciting like when Ordinals was booming, right?
Right.
So that makes me wonder what is, I mean, we know the Bitcoin miners are all eventually moving to AI, and that's basically their future, but maybe you have got a little bit more insight that you can share with us about really this on-chain activity and how you see it from maybe if you have anything behind the scenes that you can share with us.
Yeah, I mean, you're absolutely right. If you look at sort of the level of revenue from transaction fees that Bitcoin miners got last year versus prior years, it was down substantially. And even though the total amount of money moving over Bitcoin was at a new all-time high last year. So the network processed a record amount of transfers from a sort of dollar-denominated perspective, but the transaction fees were low because they were chunky transfers as opposed to, as you mentioned, ordinals, et cetera, et cetera. I think it's a challenging environment for miners. That's my honest opinion. I think it's a challenging environment for miners. I think the cost to mine is very high. The rewards are relatively low, and the difficulty is very high. At some point, those need to normalize. Maybe they normalize because Bitcoin's price just rips, or maybe they normalize. More likely, I think, is what you suggested, which is more and more of these miners deflect more of their sort of computing power towards AI. And maybe we even see the sort of hash rate stabilize or go down over time. So it is a difficult environment for miners. Of all the spaces in crypto, I think that's one of the most challenged, and it's something to keep an eye on.
Yeah, and I mean, AI is great, obviously, and what they are doing is, I mean, they are kind of like the pioneer of digital infrastructure, but it's not a switch, right? And money are not coming straight away. So usually it takes a little bit of time for AI compute to be monetized and be able to sell, the power they have got.
That's exactly right. Over time, I think there's a nice balance between proof of work mining and AI, and I think they align. The world is building a lot of installed data center sites. Those can fluctuate between the two. So long term, I think it'll sort itself out. But for sure in the short term, look, I think it's just a challenging space. Again, cost to mine is north of $100,000 on average across miners, which means mining is like theoretically unprofitable at these levels. Now that changes over time, but it is a challenging environment for the miner space, for sure.
Tell me about the ETF space, because you are an expert on it. And obviously ETFs are a great entry point for many institutional investors into Bitcoin, but not just for them. Generally, I think the ETF kind of industry is still it's very active, if we think about traders and investors as well.
Yeah, the beauty of ETFs is that the same structure can serve all different types of investors. So I own my Bitcoin ETF, and I probably will never sell it. Maybe I'll sell, pass it to my kids in whatever, 30 years or something. At the same time, someone else could own my Bitcoin ETF and be trading it And I don't care. That just makes the ETF more liquid. It's good for me. The same is true on sort of scale. Harvard owns Bitcoin ETFs and my father owned Bitcoin ETFs. That's pretty cool. Like the best way to gain exposure for Harvard is available to my father. That's kind of neat. That's the beauty of the ETF structure. That's why it's been so successful. It's one of the fastest growing financial innovations of all time. It's gone from zero to about $30 trillion in assets in the last 30 or so years. Look, ETF flows remain remarkably robust. I think we could see record flows this year because you have an increasing number of professional investors who can access Bitcoin ETFs. I mentioned the wirehouses, which, $10-20 trillion in assets, couldn't buy them until Q4 of last year. Now they can. That's a huge new increment. Also, a lot of people who bought them in the first year or two that they were on the market are going to double down and buy more this year. So I think ETFs are here to stay. I think eventually there'll be $100 billion in Bitcoin ETFs. And I think this year could be record flows. We're already seeing strong flows in the first week. So very excited about that space.
Yeah, I'm a bit frustrated here in the UK because we had these ETN that were approved, but still, as a retail investor, you cannot buy because, I was talking to my brokers, and if you are not in that category, right, of level up investor, that is kind of like institutional investor, they are not going to let you do it because they are still waiting guidelines from the FCA. So it sounds that it's great maybe for you guys in the US, but for us in the UK, and I don't know really about Europe, but it's still regulation is, it's so slow.
It's so slow. Yeah, the FCA has been painful on this front, making progress in fits and starts. There were big hopes in Q3, Q4 of last year that it would open up in a substantial way. Made some progress, but it's still not fully open. The only thing I will say from the US perspective is that was true here too. And eventually we got there, right? The first Bitcoin ETF was filed in the US in 2013, and it took 11 years until it launched. So we had some of the same frustration that you're having. Eventually you get to the other side and things are good. Bitwise is pushing in the UK as well.
Right. Yes. I know that you have got kind of a global presence, and that's I think is great. The other narrative that I have been looking into, I thought was quite interesting. It kind of came up with all the situation in Venezuela, right? And I was wondering if there is, the fact that we found that actually Venezuela was holding so many Bitcoin, right? Could maybe kick off a new trend that will be the Bitcoin sovereign treasuries, maybe.
Yeah, I think it's actually already happening in a significant way. You mentioned Venezuela, which rumors suggest they may hold 600,000 Bitcoin, which is enormous. I think we'll find that there are many other individual countries that have been quietly accumulating and holding Bitcoin. I note that even Turkmenistan just passed a new initiative at the start of this year to facilitate access to the digital asset market. The world is getting crazy, right? And it's a new multipolar world where it's not just a US dominated world, which is what it was for much of the last 25 years. In that world, it's completely reasonable for smaller countries to want to hold assets in a currency that's not controlled by any state, right? The US dollar, the outlook for the dollar is controlled by the US. The outlook for the yuan is controlled by China. Countries may want to step out of that for part of their exposure. I think that's what you saw in Venezuela. I think that's what you're seeing in many of the stans. I think you'll see it in other parts of Latin America. It makes sense for the same reason that you and I don't want 100% of our wealth tied to any sort of fiat currency that can be debased or abused. We want some portion that we can hold as self-sovereign individuals in something like Bitcoin that's not reliant on anyone. I think an increasing number of countries looking at this wild, increasingly crazy geopolitical landscape will say, maybe I don't want to be 100% fiat. Maybe I want to have some gold and some Bitcoin and other assets that I can hold that don't depend on the whims of leaders in these various countries around the world. So I think it's a pretty big narrative for 2026.
Bitcoin treasury companies. How do you think about Bitcoin treasury companies 2.0? And also, I would like you to comment also on the digital credit kind of development that has been happening, especially with in the US, with strategy leading it.
Yeah, I mean, look, I think investors get digital asset treasuries wrong right now. There is a big fear in the market, just to address one half of the equation. There's a big fear in the market that digital asset treasury companies will sell a lot of Bitcoin in 2026, particularly strategy. And that fear is just completely unfounded. There's no reason for strategy to sell. It has plenty of cash to pay its interest payments. It has no debt that comes due. I'm not sure that anyone who's suggesting that they will sell has actually looked at any of their debt instruments or the covenants or their financial responsibilities. It's just like no reason. It's like if I had $1,000 in credit card debt, that doesn't mean I'm going to sell my house tomorrow. It probably means I'm going to pay it at the end of the month. That's the situation that MicroStrategy is in. So I think important to note, I don't think they're going to sell Bitcoin. I do think there is a digital asset treasury 2.0 evolving, where you're going to see well-run digital asset treasury companies do interesting things with their Bitcoin. So strategy is at the front of that, where it's financializing its Bitcoin and using it to write debt instruments and provide different volatility exposures to Bitcoin. And that's very interesting. We're hearing from a lot of digital asset treasury companies that want to use Bitcoin to generate income through things like option overlay strategies, or lending out their Bitcoin to the different markets. I think there was an era, maybe to use your phrase, DAT 1.0, where these companies thought it was enough to buy Bitcoin and hold it. The problem with that is once we had ETFs were a better way to buy Bitcoin and hold it. Now these companies have to do something harder. So maybe that's issuing debt, maybe that's writing option overlays, maybe that's lending their Bitcoin, but they're not going to be rewarded for doing something that the ETF does better. They're going to have to do something the ETF can't do, and that is difficult. If they do that, I think they'll be fine. So there'll be some winners in the DAT space. There's an opportunity for risk-taking investors to wait for the moment and buy DATs at a discount, and I think they'll start to prove themselves out. But not every DAT will survive.
I love what you said, and it's something that it actually came up while I was at the Bitcoin Amsterdam conference. It was really like, you need to be different. It's just find your edge, be unique, do something that nobody is doing, and then you have got something really that you can talk about. Otherwise, the trend is dead. It's not a trend, right? It's not anymore.
It's exactly right. I mean, the capital markets don't reward you for doing things that are easy. You know this, you're building a company, I'm building a company. They don't reward you for doing something easy. They reward you for doing something hard. And that's what DATs have to realize. They need to be different. They need to be distinct. They need to do something difficult and do it well. If they do that, they'll be rewarded.
Brilliant. Now, let's move to the digital asset space, because you talk about tokenization and stablecoin, which are other two big trends for this year. And I have a question about tokenization, right? We have been talking about it, I think was already, last year, the year before. It's kind of something that we want to tokenize everything, right? Capital markets, wine, anything should be, even your identity should be tokenized. Where are we with tokenization in financial market?
Yeah, it's a great question. I think for traditional financial markets, we're still largely at the experimentation phase. So even in the US, the world's largest capital market, the market I know best, regulation is still evolving in that space. So all the exciting pilot projects we're seeing from NASDAQ, from the New York Stock Exchange, from Goldman Sachs, from Bank of New York, those are all still sort of pilot projects. They're testing things out. So we're not at the hockey stick scale of growth. Where we're at the hockey stick scale of growth is more crypto native. Things like tokenizing private credit funds that can be then put into DeFi strategies and borrowed against and looped. I think that's where we're going to get the real growth this year. It's not on tokenizing Tesla stock. I think that's probably another 2 or 3 years out, because we still need some regulatory progress and a lot of pilot projects that try to do that. But we're not seeing that really scale because we don't have a firm regulatory grounding for it. But if you can tokenize an asset that then can get plugged into crypto's infrastructure and used in DeFi protocols and lent and borrowed against and used for liquidity provision, that area is really going to grow substantially this year. So I think the mainstream media maybe has overhyped traditional tokenization and underhyped sort of crypto native tokenization. And I would focus more on that, what fits in the DeFi ecosystem side if I wanted to see where the real growth is.
I think one of the reasons is always there hasn't been really enough education in the space, and most of it is like project paying for advertising media, and it's kind of like tier 3 type of media that talk about tokenization, because the tier 1 is still kind of like, is that really something that's got legs that I can talk about? So the narrative are a little bit distorted. But stablecoin, right? I think people used to think about, there are two stablecoin, US based, you have got Circle and you have USDT, and now obviously USDT is kind of like expanding beyond that, is a leading company making more money than BlackRock, so they are kind of the stablecoin, I'm gonna say apex, but stablecoin is something that is gonna send payment mainstream, or is kind of like a middleware instrument that is not really going to evolve as we thought it would.
Well, I think it's actually a bigger market than we thought it was. It's not just payments. I think in payments, it may well exist as middleware to the extent that I may not be aware I'm using stablecoins. I mean, recently saw Rain, which is a stablecoin Visa card issuer, raise at a huge valuation to essentially provide that middleware service where, from a user's perspective, you don't know you're using stablecoins, but you have easy access to dollars everywhere around the world and easy access to dollar payments. That's an incredible use case measured in trillions of dollars. So I think that's a very big deal. I also think you're going to see, look, I'm a uber bull on stablecoins. I think all payments will be stablecoin based. I don't know when that will happen. Maybe it'll be 10 years, but it's such a more efficient rail that I think that's the direction we're going. So whether it's labeled stablecoins at maturity or it's just what we mean when we say dollars, it doesn't really matter. I think the underlying ecosystem is going to be stablecoin driven just because it's so much more efficient, particularly for a globalized world.
I like what you said. It's going to become the technology that we don't know that we are using. And I think that's exactly where we are heading to now. The final question I want to ask you is kind of like picking up on something you said before about sovereignty, because this is like an area that I'm deeply passionate about. It's not just about money. It's about sovereign mind, the mindset as well to be able to adopt or look at this new technology like Bitcoin and crypto with the right eye, right? As a humanity, we are kind of regaining control of our sovereignty. So we can think about sovereign mind, sovereign body, right? How do you kind of think about it when it comes down maybe to your own practice, to your own life? And then obviously that can be applied to work, but eventually sovereignty is something that we do experience ourselves, right?
Yeah, I think that's right. I think a lot about, I could answer this from many different perspectives, but the one that first jumps out to me is almost from a level of risk. As I think about my personal financial situation, my family's financial future, I'm aware that one of the big risks is that historically it's all been dollar denominated. And therefore, my future rests on the decisions of others and what they may do that may not be in my interest. And that's worrisome. One of the beautiful things about Bitcoin is you get to take some of that control and you can feel for yourself that you're not dependent in that same way on third parties that you might not trust. And that's really meaningful for me. Many people are sleepwalking to the fact that 100% of their financial future, which is an important part of how we all live, is dependent on pretty fragile individual systems that are beyond their control. And so having some that is not there is important. And then, if you think of the scope of time, we're just been actually moving in this direction of sovereignty for hundreds of years, right? People used to be completely dependent on their local town or village and the leaders in that space for their employment and their livelihoods. Even 30 years ago, people were completely dependent on large employers that really controlled their financial future, and there was no movement or facility or ability to work for yourself. I think Bitcoin is one element of that increasing sovereignty. It's the monetary element, but we also see sort of the work element, right? And tying your financial future not to an individual employer, but to your own skills and capabilities, which is probably increasingly important in an AI age. We see it from a health perspective, where we used to be exclusively reliant on the opinions of experts and doctors, and now we have so much more information that we're more. So, health, career, wealth, that's a huge part of who you are. They're all moving in this direction, and Bitcoin is maybe the pointy end of that spear. At least that's what I think about when I think about sort of what are we doing here? Why is this important long term?
I think it's great what you mentioned, but then there is a kind of like, I think it's kind of a pitfall, because yes, the world has evolved towards giving us more freedom and ability to be more independent from the system. But at the same time, this technology is making us like slave. We live in the screen, we sit down all day, people are lazy. So there is the element of sovereign physical body in a way that kind of helps so much the mind to be free that we are missing. So how do you think about that?
Oh, I mean, that's great. It's absolutely true. The thing about that is it comes down to individual choice, right? So you have the ability to be a sovereign individual and drive yourself forward in a way that you didn't in the past. You didn't really have that choice. But there's definitely a huge part of the system that doesn't want you to have that choice, that wants to feed you algorithms. So I think you just have to be aware of that. The good news is you can make the choice to take that fork, as long as you're aware that there are these other forces driving you in sort of a herd direction. So I think it is an irony of our time that we both have more capability to be sovereign individuals, and then maybe more probability not to just suck into the screen. And you have to constantly keep that in mind. I certainly do. I think many people do, particularly at the start of a new year. They refocus on that. So I'm aware of the tension, but I like to.
Yeah. That's a great solution. So tell me, what are the things that you do to make sure that your body is happy as you have to work so hard in your work? What are you kind of like your routine to keep control and your body, free?
Yeah. From a personal perspective, I mean, no one does this perfectly. There are a few things. I have a hard and fast rule about getting 30 minutes of outdoor exercise every day. It's not much, just a little window, but doing it consistently every day, I think adds up significantly over time. I try to take breaks from screens one day a week, which again, it's hard to do. That's one day a week. You could say that's not much. It's like 16% of the week. But if you succeed in doing that on a Saturday, it sort of breaks the constant addiction. So those are probably the two that come first to mind, just repeatable habits that I try to do reliably, that get me to step outside at least for a minute and break away. But I'd love to know what you do. How do you tackle it?
I love that what you said, to go out for 30 minutes, because that's something that actually can be very helpful for people, to make sure that there is that kind of contact with nature, if you can, obviously.
Yeah.
I mean, from my side, I think sleep is really important. So I used to really compromise on sleep. And that was making me very anxious, not performing well. So I think sleep definitely, 7-8 hours minimum. And then obviously yoga, which has been my medicine for, over a decade. But I definitely agree with the fact to go out, get the sunlight. The sunlight is so important. So I think you brought up something very interesting that I think everybody should just take 30 minutes to go out.
Yeah, it's not much, 30 minutes, and just make it happen every day. It's been helpful for me. So
yeah. And then the day away from the screen, just to focus on your family, I think that's also important, because I mean, especially in finance and in crypto, people just work, and they sometimes compromising on relationship, and then you see, family and happiness and stuff, where if you can just, and sometimes I think that brings us back to the point about presence, where if you are staying with your kids and play with them and be with your wife, you need to be there with them. So it is about presence. Like you are in a meeting, you're actually listening to somebody. So it's not about staying with them 7 days a week. It's about having that great Saturday with them, they will remember.
Yeah, I love that you say that. That's definitely my approach. And you're right. Crypto is hard because it's 24/7, 365. And I'm better, as maybe you can tell, with binary things. I either do them or I don't. I have trouble with sort of like, maybe I'll do less screen. I couldn't do that, but I can take Saturday and just not be on email, not be on social, not be on screens unless it's urgent for work, in which case someone will call me. So yeah, that's my approach. You do need to be there. You do need to be present. I love the yoga angle too. I'm not as reliable there, but when I am, I find it very.
Yeah, it's interesting because like there is an aspect in yoga that people think can be, because there are so many different kind of yoga style. Yoga is not a challenge. It's not like a 30 days challenge. It's not like a HIIT class. It's really a journey, and it can be a really long journey. And all the time you go to the mat, you still need to work internally and then between the body and the mind to go somewhere. There is directionality there. So it's really interesting. And then when you actually bring it back to your breath, that's another massive topic that we can stay here forever to talk about, but definitely something quite important. Matt, listen, it was great to have you on the show, really, and thank you for joining and sharing, your insight and some amazing views as well on what's happening in the Bitcoin space and stablecoin and, tokenization. And thank you.
Thank you for having me. I really enjoyed it.
Matt, thank you for joining us and everyone for watching it. If you enjoyed this episode, don't forget to subscribe and share Financial Fox. It helps us to keep this important conversation going and educate more people about Bitcoin. Please remember that all the content on the show is for informational purposes only and not intended as financial advice. Any opinions expressed by me or my guests are ours alone, and you should not act solely on the back of them. As always, do your own research, level up your skills, and be accountable for your own decisions.